But why, some say, the moon? Why choose this as our goal? And they may well ask, why climb the highest mountain? Why, 35 years ago, fly the Atlantic? We choose to go to the moon. We choose to go to the moon in this decade and do the other thing. Not because they are easy, but because they are hard. Because that goal will serve to organize and measure the best of our energies and skills. Because that challenge is one that we're willing to accept, one we are unwilling to postpone, and one we intend to win. We choose to go to the moon.
Hello and welcome to the 56th episode of the World Blockchain Roundtable. I'm Dave. I'll be hosting today along with Greg from Rivet, Lisa Mighty Davis, who's in her car right now, aka Litecoin Lisa, Joe, founder and architect of Dragonchain, Reggie of Veritasium, and if you believe it, founder of DeFi. And as I said, I'm Dave, and I'm from Den Social. A quick update on the World Blockchain Roundtable. Lot distribution from last week's episode. If you remember, participation earns ownership of this show itself and, the World Blockchain Roundtable layer on Den Social. So this week, each host from last week will receive 166 lot, and each topic contributor from last week will receive 55 lot. The theme was suggested by JP12X. Thank you, Mr. Peacock. And he will receive 55 lot. And these ownership tokens come with perpetual passive income, free edits in the layer, and governance votes as well. So if you want to get your topic on here, you can vote for them more and more. The more of these you have. So let's see. We have a vote for July theme that's posted in Den, and if you are a lot holder of any quantity, you can vote on that to get topics in that you want us to talk about, and whatever host is on for that topic. We rotate through them every week. Let me see if I can get a better... I'm not going to read them because my vision isn't working at the moment, but they are posted, so go vote on them. Do we want to read through those right now? Do we look into these, or are we just sending people over there?
Thanks. I think it's okay to send them over, right?
There's some good ones in there.
I'm probably going to vote on one right now, just for the heck of it. So.
We voted live on Coffee with Den, which is what I do on Wednesdays, like on a demo. There's some cool ones in there. I remember reading through them.
What's the ranking right now? What are we at? It looks like Pitfalls of Celebrity Shilling is 12.
I can see it now. Awesome.
Full episode for current events 15. So Dow's Constitutional City States. I think that was Lisa's even is 2.
Ooh, that's
3.
one of my favorites.
Yeah.
Even though I just voted for one that I think we have a lot of practical value to add to people
that
who
was
might not know us that well.
Yeah, that was the popular one. The Dow is City States. That's cool. I remember. I remember these now. What was the other one I was looking at that was really interesting? I don't want to skew anyone's opinion, so I won't. All right. But yeah, so that's up and it's ready to vote. And as a reminder, that'll time out after a week. So if you don't go in and vote on it, it will time out and decide without you. So do go and participate. Let's see. Looks like we are on to our current events section. So we start out every show with about a half an hour of current events discussion. And, usually, to be honest, we have a little bit of a chat before the show to say, hey, what's going on? What do we want to talk about? And we didn't do that in the green room today. So let's do that now. What's going on, everybody? What's happening in your world and what's current events from your perspective? Because, we all see the world differently.
Celsius would probably be big on that list, maybe.
I think
True.
The biggest noise is the Celsius thing. Yeah.
Yeah.
Does anybody feel like they have a good enough grip on that to describe what's happening? Because as one thing I did talk about before the show was I tried signing up for them before Florida was so friendly to crypto a long time ago, and I couldn't because it just wasn't open to US or Florida or something. And then I just ignored it for a while and only started looking back into it again recently. So I actually am relatively unsure about what all is going on with that.
Yeah, I'll chime in first if you guys don't mind me throwing at the wall here. But and again, I think there's a lot of different things to learn from this, which is something that people should take to heart when they get one piece of wisdom out of this. Don't stop digging, because there are so many lessons for anybody who wants to be a part of this space hidden in the darker corners of the fallout of that, right? But what we're watching right now is a chain of capital failure, right? It started with the UST token and Luna crashing, and what we're watching now is sort of a rolling wave, if you can think of it like a tsunami.
Yep.
Right. It started with this rumble on the ocean floor that killed this little project maybe a few people in the space had heard of, but that money traced back to Celsius and then traced back to Three Arrow Capital, and we don't even know where that ends yet.
So it's
whatever
like
the case, anybody who did not follow the number one rule of investing, which is A, do your own research, and B, it's two-part rule, and B, never invest more than you can afford to lose, and you have to take into account what
keep your
you
tokens
can afford
on
to
your person.
not spend. Like you have to count for your FOMO and leave some dry powder in that number, otherwise you're still spending too much.
So
I think that's where Three Arrow Capital.
Are you guys able to hear me at all?
Yeah,
I hear you.
We can make it up.
Yeah.
You can hear me. Do you guys think that has to do with the shared liquidity across a lot of the like exchanges and things like that? Is that part of the reason Celsius got in trouble, or?
I think they maybe made specific deals with specific assets at specific times. Like they might have said, like, we own this chunk of capital we're putting into you, and any benefit you derive from it, we want a piece of.
So I'm going to jump in and play devil's advocate. So no matter what position you guys take, I'm going to take the opposite position.
Cool.
Just because, okay? So the number one lesson is this is, you're dealing in a decentralized currency, right? Or a decentralized asset or commodity, because I don't believe they're all currencies. Why the hell are you putting your money into a centralized organization? Okay, it totally defeats the purpose of crypto, 100%. So that's a fail up front. And I'm going to be frank, that's the problem with Celsius, the primary problem. Everything else was most likely a risk management issue. And I didn't dig deep into it because I didn't look into Celsius, because Celsius is a centralized entity. There's no reason to do business with a centralized entity. You're going backwards. And that the same goes with Coinbase and Gemini and FTX. I'm not going to play favorites. Okay, number two, the impetus heard was the failures at Terra Luna. To date, I have yet to see algorithmic stablecoin that works. Okay, the concept.
DAI kind of counts.
Well, DAI has broken the buck multiple times. Okay, once you break the buck, it doesn't work.
For a certain definition of stable, I guess.
Okay, well,
I think DAI is as stable as you can get without making a thing inherently unstable and top heavy.
Well, I don't know, because DAI broke the buck pretty heavily.
Well, they did, but they also had a system that didn't require emergency governance mechanisms to ride it. Well, it was in their plan to fix it, and it worked.
Yeah, but the problem is, once you break it, you fail. That's like, he jumped off the building, he died, but...
That is true if you're running a money market fund, right? But this is not money markets.
Let me just explain for those who don't know the vernacular and terminology. So breaking the buck means that if you have a money market instrument that is supposed to equal $1, it's supposed to equal $1. If it does not equal $1, that means it broke the buck. That's the street vernacular.
It fell off its numerary, basically. But
can I bring up some about Celsius? I mean, isn't it odd that the rules for investment are the same rules for betting, right? But the fact that you have a crypto firm, decentralized or not, because Luna, I guess, was not as centralized. I mean, it still had a lot of stuff that you might think of as, but the fact that they were providing yield, which I always wondered, is it a semantic issue? Because it seemed to me the yield wasn't really yield. They weren't actually getting that whatever you were earning from interest. There's some level of mining, but it was there was a lot of Ponzi that it would keep going as long as Bitcoin remained more valuable than it was yesterday, right? And it seems to me that's a lot. It's like and I mentioned this to the guys before the show too. Is why in crypto would you reinvent usury? Why do we need to enslave people with crypto?
Can we conceive of value transactions that involve financialization without even having that just pop up? Because like going even a little bit further than there is no algorithmic stablecoin that works. Like, why do we think that it's a feature of currency that is good, other than for old school simplified accounting mechanisms that did not have computers when they were invented? Why do we think the numerator is necessary? Why do we have to have a nominal value that relatively attaches to a purchasing power value that's just been used to steal from us for like the last 100 years?
And that's why too. Why would you ever make a stable dollar coin? I mean, I get it, especially for an exchange, but it seems to me you would want something that it would at least.
The fact that a dollar looks like it's still a dollar today is the reason that nobody realizes it's being stolen from them a little bit at a time by the
It's like, let's map everything to dollars in crypto. Let's map everything to existing banking laws in crypto. Let's map everything to the way that banks have enslaved us all these years into crypto. It's all stupidity, and the whole thing. And by the way, I was gonna ask you guys. I was hoping Sean would be on today because it's like I was hoping finally we can say, okay, this whole number go up nonsense is what really caused this. Because the whole reason that, because you think about it, the model isn't even, it's not good investment to put all your eggs in. It's like, the crazy thing is, if normal people see that, well, it's too good to be true, they should know it's too good to be true. But if they're seeing, 8 to 15%, then all of a sudden, what are they incentivized to do? They are very much pushed to put all of their eggs into that one damn basket, which is centralized and which is making claims that are kind of crazy. And if you want to make the better than 15%, you would have had it in Bitcoin anyway, right? Which would have been your own keys, and you wouldn't be stuck where you are if you had money there. So
my question for you guys is: doesn't it feel like a little bit small potatoes when you look at the harm caused by the system on the other side of this and the corruption that has been willful and measurable based on time? Relative. Ever since we've had a manageable currency unit, there have been people who held the strings that took advantage of others because of it. How can we build something that is a step away from that? Is I think a question more people ought to be soul searching on.
So here, I'm going to do I would say back to reality, but I'm just going to take the contrarian perspective. Number one, I'm not, super decentralized everything. That is not me. Okay, right. But decentralization does, or at least autonomous ownership of your assets, has one very, very big benefit. You own your assets. Yep. When you give up your assets to an entity, a for-profit entity, you're doing it to yourself. You are literally doing it to yourself. I can't say I have sympathy for anybody who wants to know anything about crypto when they do that. Okay, number one. And I'm not super decentralized everything, I'm not. But if you're going to decentralize, we use the primary benefit of decentralization, which is sovereign ownership of the assets. As for Celsius, you said that if someone's offering 8 to 15% yield, that essentially pushes everybody into that particular product. I disagree wholeheartedly. Okay, if you offer me 8 to 15% yield in a 1% to 1.5% environment, you know what that pushes me to do? Investigate where the 8 to 15% yield comes from.
Yes, right.
But you're offering 3 times the jump bond rate.
Yes,
right, and they're doing fractional magic behind the scenes with your money. It's not yours as soon as you give it to them.
Yeah. Oh, totally. Well, and it's the same thing. Okay, let's go back in time. We invent this thing called Bitcoin, and at the time you could either mine it or you could go put money into Dawala in the U.S. and basically transfer money to Mt. Gox, put it in the market, buy your Bitcoin. And the thing that blew my mind when they closed down the withdrawals, and so people were like, the price was going up because you couldn't exit. That people hadn't been pulling it to their what was the damn point of Bitcoin if it wasn't to hold the money yourself? And it's like, no, we're leaving it here. And why is that? Because they were trading. They was all number go up. That's all it was about. And it failed. And it keeps happening. It's crazy. And the reason I say that, by the way, is because this was marketed as an alternative to your bank. Hey, Normie, your bank is giving you 0.00 whatever percent interest. Bring it over here. It says crypto banks suck. That's what they're marketing.
So
and then when you have something relatively sensible come along that offers something extreme like 4 or 6%, but is also guaranteed and insured, your principal at least, right? So
Right.
you have a company come in and offer that, and then the regulators step in and say, oh no oh no, you can't do that, you can't offer 4%. That's,
I feel like we're getting lynched by our own metaphors here, guys. Like,
wasn't that Coinbase
the
or something
APY
that,
thing, the percentage yield doesn't even make sense when you're dealing with block times, right? Like, you get a block, it calculates some new small fractional amount of interest based on current dynamics. It's really live price. Yet we sell it to people as if they're buying a banking product. I think there's a little bit of a disconnect there in the messaging too. Like,
Sure.
I think people are keen to hook on to metaphors they don't need to anymore, and
that's why,
and in a way misleading people with that.
Well, can I tell you a normie take on it? We spoke at Berkeley a couple weeks ago, and one of the questions surprised me, because these were all very smart people. But this is a normie take on it, literally asking us, why would I trust this blockchain, this crypto, when I know that my bank can do what it does, right? They were literally saying that they could trust their bank more than math, and that was a very odd thing. Because I'm like, well,
and they're also saying they
People
can
don't get
trust
that
their
yet.
bank more than they can trust themselves. And in some cases that's true though, as far as being able to keep up with assets.
Well, in a way, you can trust the bank. Take a look at it. Your current savings rate is probably about 15 basis points, okay, over the last 3 years. You had inflation,
You're being generous.
real inflation, going between, say, 4 to 12% annually. So you could trust the bank to guarantee to leave and lose the money. And it's arithmetically guaranteed, okay? On top of that, you are taking risk. You're taking risk in your principal below the FDIC rate because it's not guaranteed, and the banks are relatively risky businesses. The issue is Celsius is doing the exact same thing with additional risks added onto it. So if you're going to take banking risks, at least go to a bank.
Right.
Now, what company was offering 4 to 6% guaranteed? Are you talking about Coinbase?
This was the Coinbase principal insured, not the whole thing, just your initial principal.
I feel like
think.
lots of
But,
UIs said that. I don't feel like the guarantees
but
were
there's,
as
I
solid
think-
as they were displayed.
Let's walk through Coinbase.
Okay,
Okay, because I'm like a financial analysis fundamental
Awesome.
guy.
I'm
so,
not.
Okay, so Coinbase is insuring principal through a third party, most likely. I'm almost sure they're not doing it themselves. Okay, so that insurance is based upon the balance sheet and the credit metrics of a third party, which I'm sure nobody bothered to investigate. Okay, so you have no idea who's providing the insurance.
Okay.
So assuming you have a AAA risk, and that AAA risk is different from the AAA risk from 2008, 2007, or different from the AAA risk of 2010 and 2011 in Europe, or different from the AAA risk as of right now, you're going to about to see these banks collapse, or crunch, not collapse, but crunch. Let's suppose they do insure the actual principal. Okay, Coinbase itself is a very, very risky endeavor. And they have lost 78% of their share price year to date, and they just went public less than a year ago. Okay, that's equity risk right there. Then, and if you know, I'm also into patents, which I know is very unpopular in certain circles, but patents are very popular in legal circles. Okay, I'd say between 90 to 100% of Coinbase's revenue is based upon IP, basically digital assets, currencies, et cetera, et cetera. Ethereum, Bitcoin, Ethereum tokens, Solana, et cetera. Much of that stuff has an IP claim to it. I don't see Coinbase doing anything about adhering to the IP claims.
I see
Okay,
what you're saying. Okay.
and if you take a look at their prospectus when they went public and the annual report, they do have a risk that says that there may be a claim to the IP of the stuff that we use, and that's it. So if someone or multiple parties, and there are multiple parties, were to make an IP claim on Coinbase, that is nearly 100% of revenue gone.
Mm-hmm.
So how in the world are they going to honor promise to pay your principal back.
That's a great point because
Well,
I do remember seeing the update where they
And they're actually
identified
not
your
honoring it.
assets as their assets in case of bankruptcy and that kind of
It's like
thing.
Facebook.
So,
Right.
yeah.
They're not honoring it. Like they're literally taking a web app they made that displays some numbers, and you click on it, and it makes a vibrating thing on your phone, and it sounds like you bought something, and ding, and all that fun stuff happens. But they're keeping a pool of cryptocurrency. They're rehypothecating God knows how many times. And they're saying that yours is yours and somebody else's is somebody else's, but they're reselling the same pool over and over and over.
That's called a bank.
Right, exactly. That is exactly right. And they use this. It's almost more like dark banking or shadow banking because they're not a proper bank with crypto. So they're free to rehypothecate a lot without any oversight and without setting off any red flags or pissing off the FOMC too much.
There's nobody to oversee them. First, let's go through the way the banks work. So the way a bank works in the U.S. and in Europe and in Asia, okay? You have $100,000. You send it to a bank. You see $100,000 show up on your bank account, minus a couple of fees, etc. And you say, I have $100,000 in a bank. You're wrong, right? You have an IOU that says that bank owes you $100,000, and you have sent $100,000 worth of assets, usually U.S. dollars, to that bank. That bank takes your money, puts it on its balance sheet as an asset to do what it wishes with within regulations. And then on the liability side, it books the IOU to give you that $100,000 back plus 8 basis points of interest. Okay, that's what actually happens with a bank. You're doing the same thing with Coinbase, except for the fact that you're taking an asset that was designed to give you complete and full control and autonomy over the assets, and it has its own transportation rails built in. Unlike US dollars, where you have to use a bank or something else or PayPal. And you're relinquishing all that control, giving it to Coinbase, and accepting the risk for nothing in return. No compensation in return whatsoever. That's the Coinbase business model.
Well,
you
do get something in return, though. You do get one thing. You get their values, and those values get capitalized and expanded upon, and other people try to imitate it, and they try to build it out using the money you spend. Like we're telling the market we want more when we give them money.
When you say their values, what do you mean by their values?
Their values, whatever they happen to be, right? You are stuck with whatever Coinbase decides to do when they say we're being as OG as we know how to be. Are they really concerned about privacy, or are they concerned about privacy insofar as they need to appear to be in order to continue to sell to cypherpunks? Which is it, and what have they done that they can't hide or fake that proves that in public? Because that's really how you know whether or not your money is going to thwart your own values. I think there's a lot of that in this.
I'm mentioning Coinbase, so I don't want to pick on them because all the centralized exchanges have the exact same business model and the exact same risks. But like I said, if they get an IP, if they get an IP claim and it holds up, they're done. That's 100% of your revenue gone, like that.
Yeah.
Done.
Be interesting to find out who came out of the woodwork to make sure that it was stopped.
I'm sorry, you talking at the same time.
Sorry.
Say it. No, just say it again. I couldn't understand it.
Yeah, I was just saying, won't that be like a bail-in, and they'll use everyone's money that they left it on the exchange to then pay that fine or
I think it's an attorney.
fulfill that IP infringement?
Well, it doesn't necessarily work like that. So let's say you're driving in your car, okay? Intellectual property is personal property in the U.S. That's how it's thought of and adjudicated. Okay, so you're driving in your car, you own that car. Okay, somebody gets in the car and drives off with it. You catch up with them, you say, that's my car. You can allow them to finish driving your car. You can charge them a fee to drive your car, or you could say, get the hell out of my car. It's my car, I don't want you to drive it. So if the IP holder decides to tell Coinbase to cease and desist, then Coinbase must cease and desist if it goes through the court and it's adjudicated in the IP holder's direction. Now, I say this because a lot of people really believe the SEC and Gary Gensler in thinking that crypto is a security or a financial instrument. It is not. It is technology. It is intellectual property. And you guys are going off in the wrong direction. And I think 2020, oops, I'm like I'm really behind. 2022 and 2023 is going to be the year of awakening for many, and they're going to be reminded what crypto really is, which is technology.
Thank you.
And
Thank
the question
you.
mark, guys, the only thing that I think we might be losing sight of, and to play a little bit of a contrarian here, I don't know if it's so much that the crypto space is going to realize what it is, but that our legal system's morass that it's created around all of these different conflicting rights is going to have to be litigated in public if it's going to be concerning crypto. And forcing some of that stuff into the light might not be fun, but it says a lot more about the old system than the one that we have a chance to build with what we've got right now.
I mean, you know, and here's the thing: all of what you guys just talked about was all great info, but radically boring for someone who's not here to be a banker, right? Because I don't give a shit about any of that stuff. And some crypto company saying, "Oh, hey, you can earn interest." It's like, you know what?
If you don't give a shit about this stuff and it's not fun for you, you probably shouldn't be clicking that button. Let's just say that.
I know nobody in Celsius thinks that.
Well, that's why we did it during the current events section and not during the
That's what I'm
blockchain
saying.
section.
Well, I mean,
That
unless
is-
you're perfectly
that is-
okay with throwing away the same amount of money.
And nobody
and
in
burning
Luna
it right
thought
now.
that. So like
That
that,
is
it's
why.
easy not to care while you have your money. But when it's gone, you care a lot.
No, but that's what I'm saying. That's what I'm saying. This entire fucking industry has gone backwards. We've all decided to be wannabe bankers. You go to any of these conferences, and they're like, "Oh, I want to be a banker. I want to be a banker." That's what th're all saying. And it's,
What else do we make?
That's exactly
right? It's
what
a harder question.
I just came back from Consensus, and that's exactly what I was saying. I was looking around, and I was like, "What happened to? Where's all the cypherpunks?" Like Greg's saying, "What happened to?" I was like, "They don't. They
They're whacking
So
us
they
one at a
gave
time.
away. Yeah, they gave away tickets to a bunch of YouTubers for Consensus, and then right before the conference, they pulled the panel because there's this big thing about developers think that YouTubers shouldn't get as much credit or some crap. I don't know, and so they don't respect the adoption that YouTube brings to.
Nice to know
See,
they're all
this
being
is-
true over there
Cryptocurrency.
while Rome burns with their fiddles.
This
you
is
know?
yet another example of like a form of tribalism or something like that. It's like, stop giving a shit who gets the credit for it. Make this thing that's good
Right.
for everyone exist.
We can all take equal credit for a thing that failed and ruined a lot of people's lives instead of something that saved the planet in some amount to be determined later.
Right. If you want
Let's
to like
build it first
talk
and then
about
figure out how to
that's
fairly
what
divide
that's
it.
why. Can I tell you something? It's just maybe a steroids infused version of creating a startup. That if you do something fundamentally valuable, the money will come. If you are working directly only for number go up, I have to get the money won't come. The money will stagnate and you will fail because you're
It's
not
like chasing
focused
yield without understanding what's
actually-
yielding.
Right, and the whole point this technology for its existence was liberty, you know, and it happens to be financial liberty, and a lot of other very interesting engineering concepts that all came together. But it isn't. How can we redo usury for the modern world?
Right.
That's not.
How many
that's the
self-hating
stupidest
cypherpunks are trying to
fucking
come up
thing
with
in
an
the world.
alternative model that looks more like a bank? You know, like
So, yeah.
Well, the
Yeah.
key is stop trying to look like a bank. But the problem is regulations force you into the banking model.
you know, and why would anybody want to look like that? Why would anybody want to consign their wardrobe to what amounts to a decision made by two compliance officers and a standards person? Like,
Because that's
let's
how
not
they're
go
taught.
back to that. The world's better now. It's like
That's
it's
how
a
they're
little more
taught. Instead of
colorful.
having a goal and trying to find a way to the goal, they want to replicate the problem and then fit it with a solution. You know,
It's the
That's
same
how they
reason
have
where
the
everybody.
control.
Right.
Everybody in the around 2014 was pushing heavily. We need to get institutional money in. We need to get regulators in. Why? So that we can fit in with these Wall Street guys, because that's what we know about. And all the Goldman Sachs crowd came into crypto and all that crap, and all that number go up. All the rest of that stuff is what led to what you're seeing right now. And it's, you know,
Right.
instead of creating tools for people that would have been pro-liberty, you know, free speech, whatever else, or control your own money, see what
I think we're
happens in
getting both.
Canada. You have this whole thing of like, oh, I can earn better interest here than at the regular banks. It's just dumb.
To be fair, we are getting both, right? There are some really great things, and you'll be able to tell what they are by the stuff that doesn't have random bullshit happen during this this recession. and continues to do stuff that you think helps humanity, right? Like ultimately, we're just trying to help humanity.
We're all building stuff. I'm just saying that the attention and the money is going to the bullshit, and it's causing a lot of problems. So
it's also causing.
Can I just add one more thing to help humanity? It's not a complete sentence. Help humanity to not be ruled by anybody but people of their own choosing, first themselves. Right, like it's more like not take over the world people as opposed to take over the world people. We're trying to make it hard for the take over the world people.
So on the note of Wall Streetification, and I'm looking at the financial channels. Everybody has their crypto section, and I still prefer my butt to know a little bit about finance. And I hear how inflation is going up, which is why Bitcoin went down. And I'm thinking, I've been in here for a long time, but I've been in crypto since 2013. I've been in finance for a while, since like 1992 or so. And I'm like, what the hell does Bitcoin have to do with inflation? There is no correlation I can think of.
Right. It just makes it harder to measure in the inflating thing.
Well, it is one of the primary points of Bitcoin was that you could know how much supply was there. It wasn't a fractionalization, so the value can at least be year to year maintained. It's inflationary. Bitcoin is inflationary. I see people on Twitter saying we need the Bitcoin is deflationary. I'm like, it isn't. It's so.
What does that even mean, though, in the context of tokens? Right?
Bitcoin is deflationary relative to the U.S. dollar. It's currently inflationary until they stop printing, and then when they stop printing, it should be neutral, but it's going to still be deflationary.
That's what I'm saying. You can't because we can't actually even know for certain what the real inflation rate is for the U.S. dollar.
I just want to put a lot of facts out because
literally, Bitcoin is inflating every year. It just happens to be on a curve which becomes more and more less inflationary over time, and that is a controlled amount where you can't predict how much gold will come out of the ground or out of an asteroid, but you can predict how much Bitcoin will be mined. That's the whole point of it.
That factoid
you can predict within a certain range of probability. Even it's not perfect, right?
Come on. Neither, by the way, if we're going to talk about perfection, is comparing it to the fucking U.S. dollar. So if you're going to talk to me about,
I'm not.
Will come at midnight on the last day of the year. But
I'm more throwing a rock at the concept of using statistics to be anything other than the numerical example that we have for data points from the past that aren't represented by starlight. They're not all that useful going forward if you understand the basic concept of supply and demand and economics. I'm a Mises guy, so sorry for anybody who's hurt by the idea that there are universal principles of economics you can decide based on conditions that don't vary across space and time.
So here, I'm going to, again, the contrarian in me. So, factoid, inflation rate is meaningless in a vacuum. It doesn't really matter. It's in a vacuum. Inflation is not bad. Inflation is not good. It just is. Okay? Inflation becomes bad when the rate of inflation outpaces the rate of value creation. Then you have
adoption.
A destruction of value.
For crypto, it's adoption. How many people are using Bitcoin?
So inflation is neutral if value creation matches the rate of inflation, and inflation is good if value creation outpaces the rate of inflation. Right. So you can have an inflation rate of 19%, but if you're creating value at 25%, your economy is cooking and rocking. People don't. This is all relative.
It's still all information about everything that happened in the nanosecond before we articulated it, and everything before that, but nothing after is predicted by it.
Okay, but predicting is a fool's errand. A lot of people say, like, how do you predict, the collapse of Bear Stearns? I didn't. I read their balance sheet. And 1 + 1 does equal 45. That's not a prediction. That's numbers. 1 + 1 does equal 45. So now the concept of economics, because I know it's a lot of the cypherpunks and early developers who created crypto things rely very heavily upon economics and economic theory. A, they run economists, so that's a little dangerous. Okay, but B, if you look at the most successful investors, the most successful business managers and operators, I can't think of one that's an economist.
Dude, if we're talking about economists, we've got a pretty low bar, right? If you can run a couple circles around a guy who plays with fucking cartoon animals on TV, he's in there with the toys telling you to buy or sell, or you can take your pick over on the other side of it and listen to that asshat who said something about the internet not being a big thing because the fax machine wasn't revolutionary.
Yeah. Well, I'm not a big fan of his, but I don't want to pick on anybody.
The field is kind of dead, so it's not really that hard to be a good economist.
And I'm not trying to demean economists either. So I'm not. But look at those who are successful in things financial, and they're not economists. So trying to base your new science, your new platform, your new technology, your new business on economics is dangerous. Okay? And I have yet to see it work.
Right. It's
but
not
I haven't
based
seen
on
everything.
economics, though. The economics just happen to fall out of the math.
Yeah.
They're very simple, purist systems that you can analyze in parallel, but didn't have to depend on one another. Right? I don't think the cypherpunks would have picked it, right, if it didn't happen to work out like that. But I don't think they designed it based on the math, or the economics. They designed it based on the math.
The important point is that you can consider that the inflation rate of Bitcoin against its adoption, and whether the adoption is as intended when it was initially created doesn't matter. Because if more people want Bitcoin, then it's going to be worth more. And our typical way to compare it is against the dollar, right? Or at least that's the map that we have since its start. And so it's an interesting, or at least since the pizza was sold, but it's an interesting thing that that's the value. And that was the thing that attracted me when I first came upon it. Is like, oh my gosh, this is something that is predictable. You know, it's not predictable to the point of physics, right? But that it's predictable.
It's reasonably stable
to
patterns,
commodities,
in
right?
cycles,
And it's Anyway, that was a very interesting thing about it.
Yeah, I mean, it's deterministic. It's fair. It is. It's money that works. That's just kind of out there.
In the way that people like to think about things that have value,
and
at the very highest level. I guess if you just want to say it dumbly, like, it works for people's brains because it has a couple properties that make it connect up in all of the ways that things that we've used for money in the past like to connect up to.
Yeah, and people use the dollar without understanding how it works. So I don't think that people have to understand how Bitcoin works to use Bitcoin, that kind of thing. This is a great start to the show today. We're going on 40 minutes in, and so I wanted to get into the topic this week is request for analysis. So this will be great. We've listened to how all the hosts think this morning. So this is going to be the brains that pick apart your question and analyze based on requests here. So it's organized by votes. These are I'll just go right into it. These as many as we can get to within the time frame. We will try to get through them all. The first question today is from Kratos, God of Boy. Question: should there be a fund to help fight against the SEC targeting any project? Any project would be able to contribute, because if XRP loses its case, that would hurt crypto long term. I'm sure those lawyers aren't cheap. That's a great question, and I'm sure there's a lot of opinions already in our heads. So I'll just go down the list, I guess. Joe, do you want to? Or actually, you know what? Let me not do that. I'm not going to point at who gets to talk. Who am I? Who wants to take this one?
Okay, for hot take here, I don't think we should be thinking about it in these terms. We need to think bigger. We need to start thinking in terms of how do we get people away from the SEC if the SEC tries to come after them in ways that support the underlying mechanisms that blockchain's built on, right? Like, they technically can't sue it if it's working like it ought. So how do we help people make sure that they're out of the technical zone where they can come get them anyway? Like,
give me an example of how that would work. Just
see.
Before you go on, I want the
programs to get people
before you go on, because I'm going to
multi-jurisdictional passports so that they can leave the country without a U.S. passport if they need to.
Okay, so I want the audience to know that I am a victim of the SEC, and I tussled with them over a period of about 4 years, $2 billion of legal fees before even go to court. That's before going to court. So it is not cheap. So that's disclaimer, full disclaimer. So you said passports to get them out of the jurisdiction?
Passports out of the jurisdiction, understandings of treaties so that they don't trip over the wrong one on their way through. There needs to be a safe flight path to a safe place to land where we wait out their inevitable mismanagement of the fiat system into the ground. Like, they're not going to have power eventually. They're just dangerous while they're going down.
See, the problem is that doesn't get you out of the purview of the SEC. The SEC has jurisdiction if you do business within the United States.
Right. Nothing gets you out of purview, but how do you make it as hard for them as possible to pursue you relative to anybody else?
That's the question a lot of defendants want to answer. But
right. I think we should be helping people answer that question as a matter of course, even if we're not doing anything wrong. Especially if we're not doing anything wrong, because then it's innocent information.
Let's get something straight from a previous defendant, okay? This is not about right or wrong, okay? And if you think that way, you're going to get hurt.
Well, it
tell you that. I got hurt.
And that was kind of the point of crypto, right?
So
that it ought to be.
The issue is the SEC has crypto in the crosshairs. Okay, leaving a country has nothing to do with whether the SEC can get you or not. Look, Arthur Hayes, who I know personally, Arthur Hayes, even though this was an SEC, this was the Department of Justice and CFTC, same effect though. He lived in Hong Kong. Okay, as a matter of fact, all his staff lived ex-US. Do Kwon, the guys from Luna, they're Korean nationals. You can guarantee they just lost their bid and they'll have to give subpoena documentation to the SEC, and they're Korean nationals.
Right, but there's a functional difference between being like Julian Assange versus being an Edward Snowden right now. Like, you would, if you could set yourself up in a way to be still free while fighting the nation state's push to force you into their box or whatever, however you want to frame it, like there are levels of resistance that are possible, ethical, and something that if a community did it would not be punishable.
That sounds like whistleblower protections, basically, is what you're talking about, Greg.
I'm talking about a system that lets us safely ignore those old fools.
That system is called Congress. And outside of that, I don't see how it can happen. I really don't. You're talking about fighting the most powerful government in the world. Very bad business.
I am.
And it's very, very bad for business. So if you want to do business, that's not the way to do it. If you want to do more like an anarchist ideological pursuit, then you can have that discussion. But if you're building something to create software or to make money or to change, something in the economic world, fighting the SEC is just losing proposition.
I don't need to beat him. I just need to outlast him.
And the only way to outlast them is to outspend them. Okay, the best way to do it is what Ripple has been the most successful against the SEC in the crypto space that I've seen.
Well, Bitcoin and Ether technically are more successful.
No, Bitcoin and Ether are not entities. When you become Bitcoin or you become Ether, then it's cool. But if they look, Ether is in the crosshairs. So if they win against Ripple, Ether's next. And they're not going to go after Ether, but they're going to go after the foundation. And I'm not going to name the names.
Right, but ultimately their wealth party is going to run out. They don't have all that much stashed away in fiat that they can burn to keep the price of crypto depressed. Like, they are running out of dry powder. They can't print much more. Like,
who is they?
The whole complex of the Treasury, the SEC, and the executive glob does not have the kind of wealth they need to fight this fight in any sustained manner.
Okay, so here's a misunderstanding. I'm going to let you speak. Misunderstanding. Okay, money is not wealth. They cannot run out of gunpowder when you make gunpowder. You
dry powder when you're talking about capital that actually has meaning, right? People will take a dollar right now. When will they stop?
The U.S. dollar has more meaning than any currency in the world, and will for the foreseeable future.
And the only reason, Greg, that they would collapse is not going to be because of their war against crypto. It's going to be because of their war against anyone who wants to not have a central bank, right?
Let's let time prove which one of us is right.
Look, no. Here's the thing. You're talking about this tiny market. Crypto doesn't have a ton of value in all compared to what has been printed out there.
Just because we don't understand how to create value in intellectual property for software, like its value, it's just not measurable by accounting properly, so we don't count it.
Okay, you're saying we can't measure it correctly. I believe Bitcoin is more valuable than the U.S. dollar. Okay, but
I do too.
The fact is that the U.S. dollar has a lot more presence, right? You could go spend a U.S. dollar pretty much anywhere in the world, right? And
right now, today in 2022. I'm just
Crypto's
wondering
not
where
the
that
only
looks
thing.
like, what that looks like in
it.
2023.
Let me finish. That the fact is, I think it will collapse. I do think it will collapse. Do I think it's going to happen in the next year when it matters to me? I don't, right? I've been waiting for years for it to collapse, and every time it does collapse, they seem to somehow figure a way out to cheat the system further. But when it does collapse, it is not going to be because of the amount of money that the SEC spent on the war with crypto. They're going to outpace us by far, as Reggie says. There's no way you can outspend them, okay? Because they have the paper and they have the ink, and that's all they fucking need. They don't need anything else to outspend us with the lawyers that matter.
Right.
I mean, to fight them in their own court, on their own grounds. And if they do collapse, it's going to be because of the war machine. It's going to be.
And honestly, if we really pay attention to our U.S. government pendulum swings, then we've got a big box of wrenches to throw in Gensler's gears coming this fall.
I agree. And by the way,
it's not going to work. They can't sustain the effort for long enough.
I do think, in my opinion, that this would be a super valuable thing. Now, the issue is with the DAO, who would control where it's spent? Which case is going to get the money, so on. Maybe they all go together. I don't know how that would work. It could be a DAO.
Right, and that's kind of what I wanted to talk about real quick, Joe. If you let me just interject for a second.
Coming in, right?
I want to hear from Lisa because I want to make sure we're all on the same page here. Because it sounds like at least four of us agree that the answer to this question is yes, and we're talking about how that would even be done, though. And so, Lisa, what do you think? Should there even be a fund to fight against the SEC? Is that too dangerous and it's a bad idea? Is it, what do you think about that?
So the danger is that then it's centralized and then it endangers everyone inside of that. I'm a part of a couple of different DAOs, and we're looking at some of those risks associated with being a DAO. And so there is a lot of strength in being an individual and using trusts and being, having your assets outside yourself and all of those things. So centralizing it is pretty risky to everyone as a whole.
You talking about centralized management or centralizing this actual
the
purpose?
Effort, I guess. That's what I'm understanding.
So you're saying centralizing it into a DAO? Is that what you're?
Well, because
everybody
you're talking about using money. You're talking about using money to fight.
Right, getting together to
the
fight.
SEC. So wherever that money is going, that would be the point of attack. Would be my understanding.
Right. So there's a safety issue involved with crowdfunding, because as we saw with Canada, anybody who sends money to something that is an enemy of the state gets targeted individually.
I will say to Greg's point, it might be valuable to make it a PAC or something.
Well, I mean,
if it's
or
already
at least
modeled,
a framework that's open that people can riff on.
Oh, totally. But I'm just saying, for one thing, and I talked to Reggie when I was on his show about this, that I am generally against trying to fit into these systems that already exist. I'm much more trying to create a parallel universe as much as possible, use what is already there that is actually useful, which might be a trust, but you could model DAO holdings within trusts. You could do all types of different stuff, but because I know a lot of people are now talking about the risk of being in a DAO, especially if it's an investment club. Right. If it's an investment club, I get it, but I'm not really into, like I talked about before, I'm not interested in that really. I'm interested in DAOs for their ability to do things in a way that's outside the existing structure. So this would fit, I think. It's a lot of questions around how you would organize it, but
is that kind of the way to go then, through DAOs, basically, to do this kind of risky business when you don't know what
this is? I was interpreting what Lisa was saying. I think she was saying more like all of it because it needs to all be stochastic, right? Like if we're really going to throw rocks at them, then they need to be coming from all different directions and all different sizes.
Yeah, this is how I would do it. Number one, the answer to the original question: would a fund be helpful? Extremely, because from a meritorious perspective, most of the companies that gave up because they couldn't afford to fight, not because they were wrong or the SEC had a good case. When David fights Goliath, David chooses not to fight Goliath because Goliath is big. So if you could give them a war chest where they can compete on the merits and the law, now you have.
And by the way,
we need
to your
David
point on
lampreys
IT,
is what we need. We need
Reggie.
David lampreys. Little fish that look like Davids that are actually just maws and morasses for the SEC to get into.
Yeah,
Honey trap quagmires for them.
Oh, yeah, that's
all
an
over the
interesting.
place.
But those are
counterattack,
tactics.
yeah.
Those are tactics. Those are things that should be employed. But the main point about having that DAO there would be if you could tie some IP to it. That is, if my buying into the DAO gets me in on a piece of IP that will be valuable when this project wins. Now it doesn't matter if it's my project. I want to put the money in. Why?
So now you created a security.
Not necessarily. Not
Not
if you.
necessarily.
Not if you make it all
I'm
about
not gonna.
past
By the way,
created
Reggie, I'm not
value.
going to make any of those. It's not. I can't make the SEC can't even tell us specifically how you make that determination.
Right.
Well,
if you have a
right.
depreciation table
But
on an
you have to
asset that's
understand, it's
not going to accrete by your effort,
Okay, so you have to.
and you divide that and use that as your fund.
You got your guys are
It's not
getting it
security.
backwards. The SEC can say something's security, but they don't get to decide. The courts get to decide.
Right.
The
The
problem
administrative
is
court
the
gets to
reason why
decide.
you have to form the fund to begin with, because the SEC points the finger at somebody and says you're a security, and now
And
they have to start spending
by
millions
the way,
of dollars.
And
of money.
yet,
By the way, I'm not even saying it wouldn't have to. It could be a security. I don't
Okay,
give a
so
shit,
hold
actually.
on.
And yet, if you're going to
let me land
challenge
my plane
Chevron
here because I have a
deference, right
potential.
now is the time.
I have a potential solution. Let me land my plane. But this is not a simple topic, so I can't do it in one sentence. So if you put money into a DAO with the expectation of gain coming out, that would be financial, okay? You have, and that DAO would be a common enterprise. You're passing a Howey test.
If you're relying,
Right.
you're relying. That's two prongs.
What if it's about having
not
nostalgia for
relying
value
on
you created
the-
under entirely different investment schemes?
Okay, so
just sitting there
here's the
depreciating?
issue right now. You see how we're debating? If you're debating, it's a court case.
No, I'm not debating, I'm
question.
trying to
Wait, hold on. It's a
iterate
question of
towards a
fact.
solution.
Hold on. It's a question of fact for a judge and jury to decide, and you're falling into the SEC trap.
I
So-
used to be a litigator, so I'm familiar.
I understand, and I've been litigating. Unfortunately, this is not a good thing, by the way. I've been litigating all my life, so that's
Oh no,
nothing to
I
brag
know
about.
it sucks. That's why I quit.
Anyway, I didn't want to get into whether it's a security or not. If it is a security, fine. The point is, this would be a valuable entity. This would
Okay,
be a
so
valuable
I understand. So let me come up with my proposed construction. Okay, something that would trigger the SEC to come after the DAO. It's irrelevant whether it's a security or not. The real expense is fighting the SEC and responding to document production requests for 3 or 4 years. Millions and millions of documents. Okay, that's where the real risk is. It's not even so much the trial, okay, which most entities don't even get up to. It's fighting the SEC for years in the administrative realm, okay? And advice for anybody, if you get a letter from the SEC, my opinion, not legal advice, I'm not a lawyer, I'd go straight to civil court immediately where you have rights. But whether here or there, okay, I would take a DAO, right? The DAO would be purely administrative and not hold capital at all, okay? And the DAO would allow other individuals to commit capital with a time lock, like an escrow.
You're
Okay?
describing a venture capital limited partnership right now.
No, not at all. No, limited partnerships have rights that you would not have here because
Okay,
it's
so
the
different
only
thing.
It's only going one way. A limited partnership is I put in capital, I get an LP unit from a trust or a LP unit, et cetera, from the
Right,
partnership.
okay.
Right? I participate in gains going up. This is I put in money, that's it. And nothing comes back.
Oh, okay. So like the original Kickstarter, basically.
No, because the Kickstarter, you put in money and then you
The
get a product.
intent to Kickstarter.
That was a
right?
joke,
Like,
I think.
you didn't technically
okay,
buy
okay.
the Kickstarter. You just
Oh, I
helped
got
them
you.
get
I
there.
got you. Okay. I
Like, we
didn't
made a
realize-
movie, yay! Now you get to go buy it again.
Now, the reason why I'm going
should
through all
GoFundMe.
these machinations, the reasons why I'm going through all these machinations is not to avoid, is to avoid creating a honeypot.
Mhm.
Okay, so if the DAO is purely administrative, right, and only allows you to point to other addresses that have money escrowed and locked, then there's no actual capital in the DAO to go after. Okay, and you can verify that this capital is available for X amount of time. And then if Super Innocent Coin LLC gets attacked by the SEC, they now have funds available. Okay,
Yeah.
so that's a way of eliminating the honeypot trap and still having capital available and guaranteedly available. Now, I haven't bulletproofed it. I thought about it. I was just listening to everybody else.
Yeah,
but that's
no,
human
that's cool,
technology.
man. That's cool.
Yeah.
It's an important conversation to have because there are people out there who have to think about it seriously, and if we aren't talking about it, then they don't have public license to talk about it. It will sound like criminal collusion to people under investigation for this. We do them a service by bringing it up.
Yeah. I mean, capital is what, the SEC's win rate would be much lower if the guys were able to fight back. Guaranteed.
Yeah.
Yeah. And ultimately, I think that's what we need is we need to protect each other. I think human beings are good at that naturally, but I don't think we've been so great at that in crypto. And I think we need to remember to do that. Just like recognize the fact that the other thing across the aisle is the monster trying to consume you and make you go away. And we all have a common interest in, weathering the storm, because it's not going to last forever, but it is a storm and it is coming for all of us.
Part two of what I said is to have an SRO let the industry police itself, because some of this trash is trash and they are scamming.
Yeah.
And I'm not saying pretend it's not. Everybody's not a scam. And just because you say someone's a scam doesn't make him a scam. But if it walks like a duck and acts like a duck and cracks like a duck, it ain't a platypus, right?
Yep.
Okay, I'm done. I talk too much.
Dude, no, that was awesome. No, Reggie, you have some of the most interesting opinions on things. Like, I want you to talk more. Seriously.
Well, thank you. Well, I've been through the fire,
discuss.
and those guys have really, really pissed me off. And I've been brought up by my mom and my dad, and they weaken me because I have this weird ideology of right and wrong and good and bad. And that's just not how it works. It really isn't.
Right.
And to untrain yourself since infancy is difficult for me.
It is difficult, isn't it?
They declared war on me the day they imprisoned Julian Assange in Belmarsh, as far as I'm concerned. So
yeah, there's certain times when it clicks for everyone like that. I've had the same experiences in different times where one day you just realize that it's just not how the world works. So let's see, what is the second question here from Alien 91? This might be one of my favorite ones right now, actually, because I have an opinion. How do we create more accountability in the DeFi space? I tend to think that we shouldn't, and we'll see what fails, and then everything's mathematical and on chain and accountable by
what do
design.
You mean accountability?
But it depends on what you mean by accountability, I guess.
You mean like accountability in the sense that an angry nun at your Catholic school growing up would mean it, or do you mean it more like? Well, maybe lucidity of accounting practices.
Oh, what do I mean? What do I mean by
accountability? That's way more
accountability?
practical. Like, that doesn't involve a sort of an air of punishment and judgment. I'm curious what the difference is.
I can't speak for Alien 91 and what the definition of an accountability is for them. But to me, accountability is who's at fault for a thing happening, or who's responsible,
Right.
or who pulled the lever, or who didn't do their homework, or
It's about tarring and feathering the
that
public
kind of
square,
thing.
not so much whether we make people whole.
Is it?
Right.
I think the whole making people whole thing is itself part of the accountability. That is, if you didn't do the due diligence and you put your money into and put your money into Celsius, I think you're the accountable one.
That's kind of
like
what I was getting at. Is
Yeah,
we have to accept that we have the ability to manage our own assets, but we also have to accept that makes us accountable. And it's kind of sort of like, either you're appointing at someone to be accountable for something, or you want the notoriety of being, known for doing a certain thing. It's kind of like just, who do you point at?
That said,
Well, accountability too is also kind of baked in, right? Like it's literally a ledger.
If it is.
So,
if it is.
Alien 91 is a friend of mine, and I'm thinking that they meant more about the DeFi companies, like
The companies themselves and how they sell it, maybe.
That is
not
the
so
other
much
side.
the individuals inside.
There's
So like the
reputation.
fraud type of questions that emerge around how things are marketed, or
There is a
Well, like
reputation
companies
component to it.
being, so much of the, everybody recreated or copied Uniswap, which was a copy of something else, possibly. I'm not.
right?
Well, and when it comes to someone who has literally said or marketed something in a way to attract normal people to put normal dollars into this to get a better yield than they can at their bank, that's when it becomes there's I don't know. And the stuff with Do Kwon, was that criminal? I assume it probably was, but I don't know.
And also, we do have a
create a DeFi project. Like, who's vetting these people and these projects, and
See,
like,
those are really important questions.
I think that's what they're saying.
Well, and there's so many ways to answer that the more that you know about what you're looking at are very easy to do. I mean, if you're not familiar, for instance, with your blockchain's block explorer, become so. And if it doesn't have a block explorer that's public, run the hell away and get your money out if you still can. Like, these are little things that me saying that is unhelpful. Actually, it's not even detailed enough to specific cases. That etherscan.io is a site that exists, is something that people who have Ethereum and Ethereum-based assets and don't know about it should definitely explore. But like, it's kind of a rabbit hole.
Is the question how to police the projects?
Yeah, there's two, like Greg said, there's like yes and yes, but can anybody spin one up? Can anyone create one? If I can go out on a limb and agree with something that Gary Gensler said, he said that we already have regulations and laws, and we just need to enforce, what we've got, which is great.
I profoundly
awesome.
Disagree with that.
It's just that, like, they're not going after the bad guys; they're going after the good guys. That's not the issue as I see it. If you knowingly form a company or an organization, and your aim, you should know that you're not going to be able to maintain this business model, and you want everybody to just keep throwing their money into it.
Right.
Like, yeah, if you go around being a douchebag
on people, should definitely not be somebody who gets to interpret regulations also.
I'm not saying that the people who are there are the right people to do it.
I think Dave's saying too that their actual mission. Let's assume that it was an honorable mission and appropriate. It
is. It's actually a very noble mission. It's nice.
I think it's if you're a Mises guy and you're a libertarian, I don't know how you would think that you would need the government.
I'm not saying we need the government to do it. I'm just saying it's a nice sentiment. I'm not saying their hearts are in the wrong place. I'm saying that their brains are.
I don't even think it's a nice sentiment. It's entirely set up so that we, the normal people, can't get into that group and make those early investments.
I don't know though. Like, if you read Hester Pierce's opinions, if you read some of those people's opinions, they give a damn about people.
Come on, you talk about Hester Pierce, one person, and what effect has that had?
It has had enough effect that people know some of the arguments she makes.
Here's a couple of questions. Okay, couple of questions. What's the SEC's viewpoint on off-track betting, OTB?
We'll allow it and watch it, basically. They don't have a hard policy.
Okay, but what's the SEC's mission?
To respond to one of the other executive branches when they need to put the hurting on somebody.
The SEC's mission is to police markets and look out for the retail investor.
Right. And to focus specifically on things like people who might be buying Twitter at a time it's inconvenient for the power.
So off-track betting has a much higher loss rate than all of crypto. Okay, guarantee arithmetically, and you can prove it. They even so much as you turn a little ticket over. Same thing with Lotto. They'll show you arithmetically you're nearly guaranteed to lose. Okay, so what's the SEC's outlook on Lotto? Off-track betting. How about oil?
Public goods.
Right? The concern is about the volatility and lack of price discovery in Bitcoin for not getting an ETF. How about oil?
If you want to hear despicably elitist things, ask or just Google anybody who is talking privately at a conference about lottery. It's fucking disgusting. They will say inhuman things about your fellow man, and it will just be completely done in the exact snickering tone you think it is in.
You mean like the tax on the stupid?
Lottery is an insult to your intelligence that they don't think you're smart enough to see, even though they're laughing in your face.
That's what I hear people say. Yeah,
lottery is a way for the state to gather assets. Okay, for it's generating revenue, and it appeals to the gambling gene.
Appeals to economic desperation, right?
The gambling gene, the greed gene. Okay, the issue is, if that is somehow wrong, then it's wrong across the board. If it's going to be allowable, then it should be allowable across the board. So you have state-sanctioned, high-risk, near-guaranteed loss activities.
Right.
And then the SEC goes after private, not-so-guaranteed loss, potentially profitable activities. One is wrong, one is right.
Double think, man. It's
And that's kind of where I am. It's like
it's intentionally illogical. It has to be.
I'm the kind of person who's willing to live beneath rules and structures that maybe I don't even agree with some of them, so long as I can know what the hell it is and it's applied evenly across the board.
Exactly.
That's kind of where my line is.
Even application is the key, and it's not going to happen because even application makes it very, very difficult for one party to excel over another. Because if you do it with an even application of laws and regulations, then you have to be better than somebody else and work harder than somebody else.
Right.
We can't have that.
Oh, and the government's never been sufficiently staffed to enforce them evenly. That would be impossible.
Anyway.
That was a quick question and some good discussion. Let's move on to the next one and see what we can get through. I don't know how many we have, but I want to get to as many as we can. So accountability in DeFi is hard, and that was from
and keep
91.
talking about
Thank
it,
you.
please.
Yes,
actually.
and keep talking about it. Glad to start the conversation. DJ Robzilla in the chat too. What's up? Are you concerned about the effects of rising interest rates on crypto? Historically, crypto has gained prominence during a time of lowering and eventually zero Fed interest rates. Although I'm not super worried about Bitcoin surviving this period, how do you think some of the smaller chains will fare under the extreme pressure of a risk-off interest rate environment?
I'm long toilet paper and ammunition. Let's just put it that way.
Well,
Hey, me too.
I'm being facetious, but only a little.
how is rising interest rates risk off? It sounds like you're quoting CNBC. What makes rising interest rates risk off?
That's a good point, man.
Well, I'm not Rob, but
I'm
I don't
talking
know.
to everybody, by the way.
No,
Okay.
I was thinking of it that way too, and you broke me out of it. That's a very good point.
well, what is that then? What is an interest rate risk off? What does that mean?
Well,
not
I'm
familiar
assuming
with
risk off
finances
means
much.
you sell risky assets, but long-term bonds are risk off, and a lot of things are risk off. Your bank account, which I explained, is risk off. You're talking
A counter thesis that's principled contrarian can be risk off if your primary mode of investment is going for things that go mainstream.
So in other words,
Right.
it sounds
just
like the
whatever the
question
opposite
is,
of what you're
in
usually
an
doing.
environment where everyone's dropping their most risky assets, are the smaller chains going to be able to survive that? Is that kind of a rephrasing of the
No,
question?
because the premise is still off. In rising interest rates, you want to go through high-yielding investments. So if rates go up to 18%, right, you want an apartment building, a small income-producing building, okay? That's going to throw off more than 18%, which it probably will,
Right.
okay? Now, you'll be paying less for it, so the price will go down, but your yield goes up. So if you stop trying to think like a trader, right, because retail traders never make money over time. The reason why trading is being pushed is because the vendors who benefit from it, broker dealers, etc., charge you transaction fees. So they want you to think trading's the way to go.
Plus a massive dose of survivorship bias, right? The ones that we still hear from are the ones that are still succeeding until they aren't.
Trust me, you don't hear from over several. Find anybody who's beat the risk-adjusted return of any common asset over 8 years trading. The only entities I've ever seen that do that were entities that were able to frontline, Goldman Sachs, Citibank, etc. And that's because they hold both sides of the client's money. So,
Right.
if I have Jane's account and John's account, and I know Jane wants to buy IBM shares for $100 and John wants to sell it for 101, I just jump in the big middle, I scalp 50 cents and sell it. That's not trading. That's stealing.
Well, and
So
the
of course I'm
Fed
gonna have-
invites them to the FOMC auction, right?
Yeah.
Like,
Well, and
Come
also
on.
something else to bring up would be the definition.
free money
How
flow.
do we define survival? And if you think that
How do you
a
define
token
risk?
price, well,
risk is really the
but-
question I think we're still dancing around.
if you have to say that the token price is the only measure of that, then you're wrong. I mean, there's that there are, depending on what these tokens do, if they are intended to be a cash, which I don't even know if Bitcoin is no longer cash, right? From what I hear, that the price is a measure, but it's not. It doesn't signify survival, depending upon what is that token used for.
Right. Well, and everybody has to also find their own way in this. Like, to a certain degree, that is the biggest risk-off thing you can do, is understand what your actual primary thesis is, so that when you're risking off, you're actually putting eggs in baskets other than the same one you're in already. I mean, 'cause that's ultimately what it's about, right? Like, is if you're trying to create some kind of hedge, you're trying to set up some resources over here that aren't impacted by your big bet over here, right? So I think that the cypherpunks are going to win, and I'm all in on everything that has already sort of, flipped a middle finger to the standard system and said it's going to fail. We don't have to pay attention to it. Then if I want to hedge against that, I have to keep money in something stable and lawful, right?
But that's not risk off. If you buy another risky asset, that's not risk off. So risk off means you.
No. I'm not talking about buying another risky asset. I'm talking about buying an entirely opposite to the kind of risk I'm exposing myself to. Like, you have to find the risk you're exposed to before you can understand how to off it.
So you're buying another risk. So how could it be risk off?
Well,
if I sell my Volkswagen,
I feel like we're saying the same thing, but
I'm just, the risk off thing. I think we are, but if you sell an asset, a risky asset, and you buy another asset, right? How do you risk off when you just traded one risk for another?
Well, I mean,
maybe it's
for
a different
instance, if it's
flavor
a digital
of risk.
asset, you probably would want to go with something physical. Like, a good risk-off asset for crypto is precious metals.
But that's not risk off.
It's risk-off if you call it part of your risk
Such
strategy.
thing as risk off?
I'll define risk financially. Risk is deviation from expected return. If you're a long
Deviation from
investor,
expected return.
if you're a long investor, it's downside deviation from expected return. For a long investor, that's what risk means. Okay,
That's
all assets have downside deviation. All of them. Look at gold's volatility. Right, there is no such thing. If you have zero risk, you will, by definition, empirically, have zero return.
right.
So the only way to get zero risk is to make nothing.
Right.
And in an inflationary environment, you're taking a loss, which means there is no way to go risk off. Impossible.
It's true.
Absolutely
You're exposed
impossible.
to it no matter what. That's
That was really
And you
good.
want to be exposed to it because you want to make money.
That's the turn you're trying
there
to
is the
make. Is I was
potential-
trying to make the same turn a different way.
If you were a maximalist, then tell me I'm not an economist, and I hate these semantic arguments anyway, especially anything that might be related to something CNBC would also say. But if I am let's say I'm a Bitcoin maximalist, that theoretically, if I only accept that one Bitcoin is one Bitcoin, maybe I could say that that's risk off if I'm entirely in sats.
Nope, absolutely not. I can prove that right now. I'll prove it, but y'all are going to hate me when I prove it. But
Reggie,
I'll let the other
You're
guys
dead
talk,
on.
and I'll accept the hate later. So go ahead, y'all guys talk. But remind me to prove how.
That's not. I'm not saying as in terms of
The point
risk.
is we
and
all
value
accept
to
some
the
risk.
dollar.
That is
if
life.
I hold one Bitcoin, I'm going to hold one Bitcoin, and that's not going to change the next week. That's what I'm saying. There is no risk that my Bitcoin will decrease in the next week, short security vulnerabilities.
None that you're not already prepared to eat in any case.
Yeah. And by the way, it's a bullshit argument. I just put it out there because if you want to define, that'd be the only thing that I would say could be zero risk if my definition is I'm going to hold Bitcoin and I don't give a shit what the value is compared to AT&T stock or the US dollar, right? So,
As a broader general piece of advice to everybody, keep your risk conversations quarantined to meetings and specific tabletop experiments. Risk will eat your universe if you let it, and nobody even knows how to define it properly outside of one single conversation.
So using the Bitcoin maximalist ideology you espouse, what does that not count for? $1 equals $1.
Yeah,
one
exactly.
IBM stock equals one IBM stock, unless you have an in-kind dividend.
That's why-
then one IBM stock
That is
equals
why
one IBM stock.
someone on
But-
CNBC is
but
probably
then-
taking the dollar, even though we know
One
there is
unit
no
of
risk.
water equals 1 unit of water, unless you're holding the last unit you own at the edge of the oasis that's running dry. Like, water is worth more to some people in some positions. So it's like you can't say one thing is one thing, because one Bitcoin to you, Mr. Cypherpunk, I'm saying this on Twitter thing, even though it's a cliche thing, is not the same thing as one Bitcoin to somebody else. If you don't have a way to compare their
Well, then
relative
you get into
marginal
which
value
Bitcoin is it?
at their place, like for some people, oxygen and water is more important than their last unit of Bitcoin, no matter
Some
what
people.
the price is.
Name one person where
people.
that's not the case.
Living ones.
Yeah, but that's trying to
right?
measure utility for risk, though. I mean, because that's if I have a gallon of water in Seattle versus a gallon of water in the Sahara, there's a utility difference of that gallon of water. It's still a gallon of water, depending on how you're measuring the risk. If you're measuring the utility of the risk, oh shit, I might find myself in the Sahara next week. So it'll be worth
Right.
more. But if I'm in Sahara and it's like, well, shit, I'm in Seattle. There's water all over the damn place. I don't need this. But that's not still. You still have a gallon of water, and it's a bullshit argument. It's all semantics.
Well, no, that's not a. That's a.
No, I mean,
that was a
it's-
paradox. in
I
economics for
agree.
a
It
while.
is sort of a bullshit. In order to value anything or price something, the price anything, you have to compare it with something else. You need a numerator and denominator. So, how much is Bitcoin?
Yeah.
How much is one Bitcoin?
No,
Give me.
If you-
I
if
dare
you-
anybody to answer that question. How much is one Bitcoin?
one Bitcoin to me is I don't really give a fuck because I'm all in on ETH.
Well, no, but like to be fair, I would, a lot of people would say X number of dollars. But then,
there you go.
how much? What is that? You know what I mean?
It doesn't matter because
How much is a dollar?
you need a numerator and denominator. You
Something
have
to compare it to.
You need a quote asset and a base asset, no matter what. One Bitcoin is XS, one Bitcoin is X yuan. No matter what, one Bitcoin is 45 Adidas sneakers. You need a quote asset and a base asset. Just like I said in our early conversation,
How does this
factoid-
evolve to barter, man? Like if we did this a barter example, like think
it's
about
same difference.
NFT for NFT.
Listen,
eggs, chickens,
Listen,
stuff
my
like that.
cow equals 3 of your goats. You need a quote asset and a base asset. In a vacuum, it's meaningless. Am I tall? Am I a tall person? You don't know until you compare me to somebody else. I'm 6'2". I could be the shortest person in the room if I'm in Scandinavia. I
Right.
could be the tallest person in the room if I was in Korea. It all depends.
Exactly. Or if you slice the time as an anthropologist from one era to the next, then maybe you're tall, maybe you're short. It depends on who you're being compared to, right? Like all of it is, the clock measuring the clock, infinite recursion. Like we can play measure games all we want. They don't really have the meaning for us, though. I guess. Maybe that's a good segue.
So, the one Bitcoin is one Bitcoin is, one bad quote is one bad quote.
No, that is
Would you-
only a definition of something that could be construed as a risk-free if the definition was set as a static thing like
If you
that.
if you count a balanced risk,
The main point is that there is no such thing as no risk, really.
if you count a balanced risk that levels out at zero in your accounting mechanism that ends up being right later, then technically, right, that you could call that if you wanted to. The hedge
I was going to
fund
ask,
is
what if
zero risk.
measure the value of it in calories, like how much work it took to produce, this many of that?
Dude.
Is that still, follow the same, like it's the denominator still, and it's
We were
Yes,
so
you do.
far
You
ahead
have,
on
a,
that.
you have
Yeah.
a quote asset and a base asset, numerator
Yeah.
and denominator. There's no way around it. You cannot name a price or value without comparison. It's absolutely impossible. Just think about it and try it.
Right,
Well,
because if for a
okay,
normie, it's a
I got
dollar.
one-
For a
I got one
normie,
that
it's
breaks your
a dollar,
experiment.
It's a dollar, but a dollar
You might
only
not,
buys
Greg.
so many eggs.
I do.
Right?
I don't know, you
do,
might
right?
not try it.
Depending on what the state of affairs are in the Schrodinger's box, where I have a thing that I've priced
Okay.
one way or not priced or priced another, and you get to choose one of those things before I open the box to transact with me on.
Well, no, then you're developing a preference between the two, and then you can poll people to see, this many people prefer this one over that many people prefer
Right.
that one, and then
But
you have a
that's
measure
when you
again
need a
against something
price
else.
mechanism as opposed to just a value.
Well, it's a discovery of
Right? Hypothetical future stuff that hasn't happened needs a price mechanism. That's how we give value to it.
Okay, well,
that's-
no, because you're conflating price and value.
No,
They're not the same.
I'm playing on the two words.
Yeah, a simplistic way of looking at it: price is what you pay for something, and value is what you get. That's a very simple way of looking at it, and it helps understand the entire conundrum. A lot of people think you get exactly what you pay for. That rarely happens.
No, you get more than what you pay for if you're doing it right.
Well, in order for you to do that over time, then you have to deplete resources from everybody else.
This,
Highly unlikely.
I think this is probably where we philosophically may diverge, but I think that that the world is a positive sum game so long as we're exercising free will when we do it.
Okay. Don't worry about it. You don't need to agree with me to
Can
prove
we,
it
can
like
we ask, the effects of rising interest rates on crypto? I mean, it should be a devaluation of the dollar, and therefore anything that isn't as inflationary theoretically should be valued more, but it isn't because they're tied more to the existing banking infrastructure and everything else with all of all of those entities coming in. And is that true? Because that's my feeling of it, but there are a lot of variables. So
It has to be something to do with the demand of the dollar, right? Outpacing.
the demand of the dollar is part of it, but it is okay,
Something like that.
if we print 1,000 times more dollars, and there's not 1,000 times more utility or adoption, I guess more importantly,
Or
you have to compare that to the anyway.
Or is
It
there
depends.
because of, for example, the military-industrial complex and global wars and the rebalancing of assets between nation states, and are people trying to get more liquid right now because they're prepping for World War III? Or, I don't know. I have no idea what the answers to those questions are. But is that why we're not seeing as quick of a collapse of the dollar as it seems like it should be, based on what I would judge any crypto project off of if I was analyzing the one node system of the dollar with the infinite
We're
supply.
running out of baby formula.
I don't know.
People can't buy things that they need to keep their infants alive. I'm pretty sure that the dollar's fucking broken.
Here, I'm going to throw in my contrarian view again. And you don't need baby formula to keep your babies alive. I'm not going to get into the mechanics of how that works. But
you can if you're okay with making a genetic dice roll that doesn't necessarily pan out for most mothers.
Well, I have 3 kids, and I was able to raise them without baby formula, but not to get in that conversation.
Wait, how?
It's going
We
to
can
get me
agree
in
that
trouble with a bunch of women. So,
regardless of your
I
opinion
know exactly. Like,
on that subject,
so-
we can agree that blockchain makes those things
I
safe.
feel like
but let's address the original question, because
access to baby formula is civilizational.
I hear, like, for instance, the demand for the dollar does not dictate the dollar's value. Okay, and so you can inflate the dollar and print. It's simple. Here, let's use real estate.
How is the dollar more valuable than its relative supply and demand?
Okay, so
Well, let Reggie
and these are the linkages that I think got Terra in trouble as well, because they didn't understand market dynamics.
Well, yeah,
Okay,
but
let me get the thoughts out. Let me get the thoughts out, and then you can disagree. But I can't get certain thoughts out in one sentence, so I have to be long-winded, because that's how my brain is wound.
Fair enough.
Okay, so Terra didn't understand market dynamics, but they put something together with their understanding, and they're probably very good at math and development and coding. And then the grapevine has that some guys who really do understand market dynamics, such as Citadel, BlackRock, came in and they broke Terra, and they broke it because their market linkages were bad, and it was easy to be seen by quants who actually did that stuff for a living.
Right.
Okay, so using that as moral to the story, let's take a look at a building. I buy a 4-unit apartment building, and I pay $1 million for it. Okay, the demand for that building drops, and for buying that building drops by half, 50%. The other buildings go on for $500,000, but I'm able to rent out each and every one of those units for $300,000 a year.
Right.
Okay, I have a 20% gain.
Yeah.
That is value.
Is
apartment,
it?
One
We don't
second.
know until we look at the quality of the thing.
Okay, hold, listen. That apartment building is throwing off a 20% yield, okay, per year, irregardless of how much other people want to buy or sell that apartment building. So the demand could go down to 0, right? That apartment building is not worth 0. That apartment building is worth $200,000 a year, right? Projected 10 years into the future and discounted back to present value.
What if all the
which is a
people
lot.
involved? Here's a hypothetical for you, though. What if all the people involved with it are just looking at the books wrong? They draw in a property wrong. It's an entirely imaginary thing. Nobody lived there. There was no building. It's just that all the documents are in order.
It doesn't matter. I'm getting $200,000 a year.
Is that value, though? Is that real value?
$200,000 cash per year. See, the value is actual profits that go into my bank account every year from rent. So the value of that building,
Even if they're completely mistaken and based on an illusion.
Listen, is it mistaken that my bank account says I'm $200,000 richer per year?
Right, that's what it says. But if there is no apartment complex and it's just everybody agreeing to pretend there is one.
So no problem. And the solution is you take the cash out in dollar bills, I stick it under the mattress. Now I can pretend in actual paper money. Okay, the moral of this story is people are still on this Wall Streetification thing, thinking that trading determines a value. It does not. Price doesn't determine a value.
Yes.
Price is what you pay, value is what you get.
Right.
I pay
And
$1 million, I get $1.2 million a year in value.
And the value matters where you measure it, because if you measure it on the person who is supposed to have been living there is no value. But if you measure it in Reggie's account, where there's real money, there is value. And
Well, even the person that's living there, let's suppose.
No. In Greg's proposal,
my framework
there was
is a
no
little
one
different,
living there. There is no
right?
real value of the building itself. So
The fundamentals of my framework require there to be actual economic production that has a net benefit to society behind it before it's anything more than just
that's
Okay, but let's bring this
malinvestment.
back to reality, right?
Right.
You
But
buy
I'm trying to I've been trying to get people to think about this in this tabletop experience. Like, forget econometrics happened, forget the Chicago school. Just think about the pure supply and demand at scale as if it were a self-organizing chaotic system.
Well, is
Is there value if it's all on paper?
Here's the thing. In both, so Reggie's taking a utilitarian, Greg's taking a very
No, I'm not. I'm taking cash flow. Cash flow.
That's pretty
Actual
utilitarian
money.
compared
And
to
I'm
what
saying
Greg's talking
if your
about.
money's based
I'm
on
talking about-
imaginary things that have no value to regular people when the end of the day happens and people
Yeah,
need to
Greg,
eat.
but that's a value as measured universally. Like, say,
No,
is
this
there
is why people hate me as
actual
people.
value created where, whereas Reggie's measuring at his bank account, and so let's say that Dave lives or pretends that he lives in this fake apartment building, and he does pay for real. He has negative value. He's actually
Well, no,
paying
I'm
rent.
pretending that he doesn't. In our hypothetical, we're pretending that it's some other party that is paying rent on this unknowingly.
As long as it gets paid. I don't care.
I don't give a shit. I don't
I
give a
get
shit who's
paid,
paying
I'm
for it,
good.
Greg.
Okay.
Whoever is paying for it has a negative value, whereas Reggie has a positive value, right?
So someone's working.
And Universal it meets your point that there is no actual real value if you're talking philosophically.
Right. I can't. I guess I refuse to engage in the necessary mathematics
Well, I
to
would refuse
pretend that that's real
normally
value
to
if there's
engage
not some
in
actual
pretending
value
that
attached
somebody's
to it.
playing for an apartment building that isn't actually living
We,
there.
we were letting
That's kind
the
of a pointless.
modeling exercise get in the way of
You
reality
don't,
when we do
Greg, you don't have to dive into mathematics to know that if I hold this box that shits out $10 a day, that I have $10 a day.
that. Right. In price and revenue, but not in value, not necessarily.
Now, what I can do with that $10 is a different story. But, and the person who's paying their rent to give you that income in the apartment complex, you accept U.S. dollars. So you're creating a utility for a reason for somebody to use it. And, it exists. It's a thing. It's liquid. Like, there's value there. And we can
Right.
debate
I guess
what
the
that
website
value
people
is.
can fantasize that. There may be some ephemeral value in there.
So the point that I was trying to get,
It's a dumb hypothetical that's outlived its use. But
the point that I was getting at is that supply and demand is not a dictator of value. Okay, it is not, because you have to understand a lot of people just aren't smart. So they will pay a lot for something that has little value, or they will choose not to pay anything at all.
And frankly, who's to say that something that seems overvalued to you is actually just the right value for somebody else? Like, I'll pay for an iPhone because I like symmetry and engineering, even if
and that's why
it's
the
cheaper,
price the price point is subjective on it. Like, there was a point in time in 2018 where the Dragon token was worth over $1 billion a piece because somebody flipped the pairs on Ether Delta, right?
It was worth $1 billion or priced at $1 billion?
Priced at $1 billion.
Okay, do you see the significance? Right?
I know. It's like, I need to say valued at because worth is not defined in this conversation as value. Worth is the price in that, and
worth means value. Price is price. So
price is a guide to plausible offers to make on a thing that you'd like to buy.
It was priced.
I feel like
okay. Let me say this to make
Anyway.
Reggie's point. Okay, was that it was priced at over $1 billion because somebody flipped they made a bad entry in the trade, right? That isn't value, right? Yeah, that's now
if someone bought it for $1 billion, that would be value. If someone actually paid $1 billion for it, someone has $1 billion in cash.
Well, value is very subjective.
If we were to call cash,
when you
though,
once you get
settle
paid
up.
for it. You see, the easiest way to think of value, the way I do it, is to think of intrinsic value. Regardless of what anybody else is willing to pay for an asset, if it's producing that amount or more, it has
What
value.
makes a value
If it is
intrinsic?
producing dollar, what about your IP? You hold a patent, no one's licensing it yet. Is there any value, Reggie?
There's significant value, and
Oh, wait a minute.
and
How do you
hold
measure
on,
it? How do you
hold
measure
on,
it? 'Cause you're not
wait.
licensed
I'm going to
to
answer
do
your
it.
question. Give me 4 months.
This is really fun, guys. I'm
4
having a
months,
great
and it
time
would
with
be
this
in public, and you see exactly how valuable it is. Okay, so right now it's calculated value, right? My opinion. Give me about 4 or 5 months,
I'm not
and
saying that's what I'm saying. You're talking about, and you're saying it's absolute, but it isn't. That if something produces a dollar value over a certain amount of time, that's a measure of value. It's
right.
a measure because you can say I'm going to accept this, and I'm going to estimate the value based upon that. You might also use the price because there might be
Right, but if we
price
look at a
discovery
superset
before you
of all our
actually can I
definition of
finish? Can I finish my parts? That you can actually then put together an estimate based, because you might not have made your the price discovery might be the only measure you have, which is not. It's all an ugly business, and you
Right.
guys in
You're
finance
paying a
try
lot
to
to play a
pretend
boring
like
video
it's
game at that
absolute.
point.
It's not. It's the value, because you value your patents. I would agree. There's value there. It
but that's
isn't
not true what you said, though.
unmeasured value yet. What's that?
I agree. I agree with you up to the point where you say price discovery is the only measure of that. That's not true.
No.
That's
I
not.
did not. No.
Right.
Jesus Christ! I said if that is the only measure you have, that is the only measure you have. If you
Right.
don't have dollars coming in on an apartment building, and all you have is people buying the apartment building, yet you can estimate the value based upon what people are paying for the apartment building, even though it is not the absolute value. Okay.
Okay.
So you have three unreliable
Estimate.
narrators giving
It
you
is
dollar
the
values
ability to estimate
that don't
the value.
agree.
Okay.
You have to
So
take all of the inputs that you have and price that is coming in, that it is earning, is not the only measure of value. Right. That's
So-
all.
Right.
So let's put the proper semantics on this so everybody knows. So what you're talking about using price would be comparables. Okay. So comparables is you have this asset,
Right.
and I take 3 other assets that are in the
Right.
same class.
Yeah.
I look at what they are trading at
Right.
per unit of revenue or unit of whatever, and then I compare it to mine.
Right.
So I have $100 of revenue, and it's trading at 2 times revenue. I have 3 competitors; they're trading at 3 times revenue. I average it out, and I say this is the value. That's one way of doing it.
Right.
Another way of doing it is cash flow. How much money does it make?
Right.
Discounted by the risk.
Probably more
Okay.
accurate. Right.
And then there's a third one, which would be utility value. Okay. Those are 3 ways of doing it.
Right.
A lot of people are stuck only on
Yes.
the price of the market.
Totally agree.
Right.
The market,
Oh, yeah, totally.
if the market priced things accurately, you would not have billionaires.
Right.
The
Nobody
only
would be
way to make
investing
that
over
much
here
more money than somebody else
if we knew
is that
knew the price.
right is that somebody got you to sell them something for less than it was worth. That's the
Yeah.
only way.
Yep.
And the only way for them to cash out is that they sold something to you for more than it's worth. So the market does not have accurate pricing.
And Reggie, I think the key difference between your and my philosophy is this. I think that an informed buyer in their specific circumstances will gain more value from what they part with than what they receive in that moment in their minds. Subjectively speaking, a person receives in exchange for what they purchased more than they gave away. Otherwise, they wouldn't do it. Willful exchange requires that there's a perception of greater value.
Yeah, financial buyers and sellers project into the future. That's how you value. So when you sell something, you look 10 years out. Okay,
they're buying the incomprehensible maw that lets them take advantage of it later. Yes.
Yeah. Well, you're supposed to be buying cash flows. Okay. So you look at cash flows for 10 years. You put a risk adjustment on it, and then that's a price. You decide whether you buy or sell. There's a lot of insider information, a lot that goes into it. But one thing that doesn't go into it.
It works when you do it right.
Yeah. Well, it works when you know more than everybody else. That's why the market doesn't have precise or accurate pricing. And if it did, you wouldn't have wealthy people.
Right. Well, that's not true, though. There are 2 kinds of wealthy people, right? They're the kinds of wealthy people who build wealth from wealth, and they're the kinds of wealthy people who create the things upon which they design notions of wealth. Like if we didn't have air conditionings and power, then I don't care how many imaginary refrigerators you've invented. I'm not going to lend you on inventory. But the inventory loan is mostly what people make a lot of money on after the refrigerators are in circulation. We need the innovation itself. The fundamental increase in human flourishing and the quality of our lives is really what's at the base of all of this still. And to me, that's where I draw a philosophical stake on the concept of value. I don't think that there's any way to meaningfully do anything other than look at history when it comes to aggregating it. So what are we left with?
Well, I can't get into that because that's going to be a long term.
I feel like you and I need to do like.
I'm going to stop at the surface instead of going down the hole. So.
Reggie, I want to start a show with you, man. We need to do like a long form, 10-hour discussion on topics or something.
That'd be cool. Allow people to come in and give us breaks and argue with us. And I told you, I take the opposite side of discussion for sport. It's,
Dude,
So it's, and there is the difference between a measure and reality. So you have a measure of value and you have a reality of value. We can just, I think, get to that because there is a difference, and the actual value is only I guess the measure is only an estimate of the actual value. The more info you have, the better the closer you can probably get.
Yeah, and then we keep inventing things to get a more accurate measurement.
My willingness to agree to disagree on value is basically where the overlap is in the superset of all definitions of value.
Okay.
All right.
What he said, right?
Okay.
Yeah, man.
Okay.
Great. I was, we are up on time, but there's no way that I was going to cut off that conversation. It was, it's such an important topic. And Joe,
that was fun. That was fun. Man.
I'm already over my penalty, so that's fine. If you want to, if we agree that we want to expand on that at all, and Joe, I know you've got a lot of thoughts. I saw it going through your head a minute ago.
It's all good. I hate these
part
discussions
2.
because they are semantic only. It's like I think we all pretty much agree about this. It's just how you measure it. It's like we should measure it with this. And it's like no, you should measure it only with this thing because that's it doesn't really matter. It's all subjective in the end.
And I think the key audience takeaway here for people watching this and trying to understand more about value is that the more you think about it and the more you study it and the more you learn. You'll meet people who have conversations like this where everybody has a really nuanced, carefully thought out, precise definition that works for them. And those are the people who know the most about it but can't relay it because they've precisely tuned their own definition of value to their needs. Think of the concept as a tool for you and learn more about it from your frame of reference and take lessons from people, but feel free to reject them too. Ultimately, the market rewards those who win, and we can only see what happened yesterday. So if you have an idea and it's different, run with it. If you win, then you can laugh in our faces later with all your money. So
yeah, and that's kind of how I was thinking about one of the previous questions about regulating DeFi and stuff. I kind of feel like the one good thing with bear markets to me, well, maybe there's more than one good thing, but one of them is that things that are shit burn down. Now things that aren't shit still burn down, which is bad, but it sometimes reduces it improves the signal to noise ratio. I'll say that. So awesome. That was great. Today was great. Reggie, thank you so much for joining us today. Yeah. And apologies to Litecoin Lisa for having to drop out. I know you're mobile and had some issues with connectivity. You're over in chat there, so I did see what you said. Everybody follow Lisa on socials. It's Lisa Mighty Davis on Twitter. And you can look her up, Litecoin Lisa. It just comes up because the internet knows who she is. And I'll say, since she's not here to say it, that her and Satoshi Sean, who's typically on this show, have a Tuesday show at, I want to say 4 or 5 p.m. Eastern, but Lisa, you can correct me in the chat. I wanted to make sure that I got a shout out to you there since you weren't here to say it. So let's see. We will have next week's topic is going to be, let's see, let me look and see if I've got it here. Nope, I don't have next week's right here, I guess. So, oh yeah, I do. It's blockchain and a bear market. Hey, how about that timing? So the theme next week is blockchain and the bear market. We do a different theme every week, and it's picked by all of you. Share this episode. The more that you share it, the more lot that our hosts and topic contributors will get. We count them up over all of the different outlets and award them every week. So I want to thank all of our hosts again. Where can people follow you? Do you have anything that you want to say on the way out? Any shout outs or something that you want to promote that's going on in your world? I will start with whoever wants to go first.
I just want to jump in and say blockchain is in a bull market. So don't confuse blockchain and crypto. The banks are putting money into blockchain, CBDCs, 150 different sovereign nations. Blockchain is in a raging bull market. Crypto assets, publicly traded crypto assets, yes. So, semantics do matter. At Reggie Middleton on Twitter is the best way to find me.
Awesome. Thank you. And Reggie, stick around for a minute after, and we can chat on the side.
Great.
Joe, what's going on with Dragonchain and with Den Social or whichever project you want to represent at the moment? I know your hands are really, really busy.
Gosh, there's I've had a bunch of customer meetings this week, so I haven't even thought about what's actually, if anything's going to be announced Dragonchain side. I guess on the fundamental side, we are closing out on some refactoring with the core platform, which is going to be super exciting and boring at the same time for anybody who's not into the engineering side of things. But essentially, we are clearing up a couple of little, I guess, splitting hairs on some scalability issues with RAM, which will lead to some improvements on the network itself in the future. But in the very least, for a couple of the customers coming in, we're getting ready for some higher scale, and that's super exciting for me because I've been waiting for a long time to do that, and it's on its way. Check out, I was just in a Berkeley symposium on a panel 2 weeks ago. The video just got released this past week, so go check that out. It was pretty interesting and enlightening discussion because there were a lot of very smart lawyers, and they were actually very. I mean, there's a lot of good points about liberty made. So even though it was about law and art and finance, so it was a pretty good thing. That's probably it.
Awesome. Yeah, and I'll second that. I watched that and was impressed with the quality of the conversation, not just from the panel, but also from people that were asking questions. They had decent questions that I thought were good, and those responses were great too. I wish you would have spent more time talking about the relativity question at the end. About,
it was Berkeley, so that guy, he had some interesting questions.
Yeah, absolutely. So go check out that as well. That's definitely true. Greg, let's talk to you next. What's going on your end?
So just to be as brief as I can about this, Rivet is about to slash our price in half for anybody who signs up, and then offer a discount structure that lowers our actual price compared to competing offerings anywhere by as much as 2/3, if not more, depending on what we talk about and what you're willing to do to help us spread the word.
Wow. Don't you love it when technology allows you to undercut the competition?
Yeah. The funny thing is, you would expect us to suffer terribly on gross margin, but you would be wrong for doing this. We actually are doing this because we've finally been able to gather enough data from just running the Cardinal backend, and we're able to figure out how much we can pass on at the level of scale we're at right now. We're nowhere near the bottom of this though.
Nice.
We're going to keep pushing that way. Like, we just wanted to get something out to people right now, and I'm not probably supposed to be saying this out loud. We haven't put a form up to intake people yet. But if you need to get a hold of me because you desperately need to start saving money on infrastructure right away so your project stays alive, hit me up. And we'll get you running on it as fast as we can.
Where can they hit you up?
You can find me on Twitter at Design Heretic. You can find me Greg at rivet.cloud. If you search megatexas.eth in quotes, you will find everything I've ever been on that had that moniker, which is most things. And hit me up on Den.
Awesome. Yes. Thanks again, Reggie. If nobody told you, you're welcome back anytime. We really appreciated your input today.
Yeah, man.
As far as Den Social goes, we are having a governance call today at 3 Eastern, noon Pacific, and it'll be interesting. There's we just had, I think, our fastest ever feature cycle between voting it in and getting it deployed. We just got the ability to, I've been calling them smart tags. I don't know if that's going to stick or not, but it's our first pass at smart contract integration on Den, where eventually there'll be like a whole API endpoint, and the layers can configure their own tags to work the way they want. But right now, it gives us the ability basically to self-moderate more effectively. So we're going to talk about how that stuff's working. We will demo it a little bit today, and there's another vote up for the next feature set on DIN already. So before we were able to even come back around at the next governance call, we have the next feature set vote up already. So that's cool. So stop by, go to the DIN layer on DIN social, and you'll see it in there. It's one of the more recent posts for the DIN DAO call. And then of course we'll follow DIN Real Denizens at Real Denizens on Twitter, and it'll be tweeted out then as well, so that you don't miss it. But that's all I've got.
Dude, the only thing I would add is like, retweet, repost, spam to everybody. It's in your best interest. It's in ours. But more so now that there's a revolution on, and we need to find a place where everybody can gather safely.
And the other thing to mention is, given all of the hyper negatives about a bear market, and to Reggie's point that to those who are building, there's a lot of things. There are a lot of advantages in a quiet Twitterscape. So the fact that the numbers don't actually determine the value. So anyway.
Right. Yeah. And I'll second that too. I'm one of the boring people who right now are really, really optimistic and excited, because the things that are being built and the things that are continuing to not care about what's going on with all of the clown world around us looks promising. So, all right. Since we've all went again, Reggie, you want another one?
I didn't get to piss everybody off and talk about patenting Bitcoin, because I know that's guaranteed to get a big discussion, but I forgot. Too tired, but next time around.
Maybe we can have a topic about patents in the blockchain world on some.
As long as you're okay with an A/B side-by-side experiment to see which one wins, then I'm down.
Yeah.
Anybody?
For those who don't know, aspects of Bitcoin are patented in the U.S. and Japan, and so the chain is patented. Whoa. Right.
You mean the concept of blockchain? Well, we won't. You know what? We won't get into that, because I almost started talking about it. Thank you, everyone, and have a great day.
Episode in and of itself. Yep.
Let's go ahead and go out right now. Thanks, everyone.
Because that goal will serve to organize and measure the best. Adaptable, raw capital, label radical yet rational. A tactical approach is palpable if this animal is fallible. But that conclusion is laughable, so with for all detachable from the mandible, you see it now.